All right, what's up? How we doing, guys? Good morning. Good to see you. Let's get into it, man. We are 3 minutes, 35 seconds out here from the close of Big 27. And let's get to it. We've got some range action. Though, I gotta tell you, I'm a tad curious if the bears are able to reject this early and actually take us down into a soft bear channel. That's the less probable event here. More than likely, we're in a range here for a little while, but that's all right. It's been that way all day. Couple hundred points wide. ATR is good. ATR is sitting 47, 48. It was just 50 last bar, so let's get to it. We've got work to do. How you guys doing so far? What's up with you? All right. All right. So 27 here. You know, I'd probably need 28 also. The good news is this trading range is plenty wide. I can definitely work in here. Oh, by the way, everyone's been kind of down lately because Apex wasn't running a sale. Well, you have no excuse to be in a bad mood here on a Tuesday. They're 90% off. Code BIG, baby, B-I-G. 90%. Just like the good old days. All right. 48 seconds here till 27 closes up. All right, there's 27. Let's see what 28's got. If we do get a close beneath the wick low at 25 out of 28, I'll short it. There you go, 28. This is a 2-minute chart, by the way. I'm actually going to hit it over here on the 2 while I wait on the 5. And see what's up over here. ATR about 28 here on the 2-minute. So far they had me, what, 13? Yeah, just quite shy. Just a tad shy. Let's see if Bears can take another run. Close of 69 into 70 here on the 2. Got the 5-minute closing up here, 40 seconds. ATR 28.29 here on the 2. Gotta take a quick peek at the 5. Hang on. Okay, nothing on the 5. As expected, back to the 2-minute. I've got my risk managed above 68, by the way. Well, come on now, Bulls! You want to take out the wick of 68, man? Let's do it. Man, those Bears, those fucking insecure Bears. Not getting the job done. All right, I'll cut it. That was just a scalp. We're here on the 2-minute. Let's go back to the 5. Oops. There we go. I'm looking at this way more like this. Big range, so get rid of this. Alright. Well, I mean, yeah, the ATR here on the 5-minute is 46. The volatility's good. It's just, you know, this, I'm not gonna pretend like the price action is the best we've ever seen. We're not even close to that. I'm gonna hit it here on the 2. Risk the Wikai 64. These are scalps, by the way. These are much smaller trades. Until the 5-minute gives me something I can put a little size on. Give it a little room. There we go. Bears, what is with this insecurity, man? Been kind of the story the last couple of days. They take me in the money and then head right back to break even. There you go. Take it through! I want to see some confidence here, Bears. I'm not making some big outsized ask. There you go. Better than a half ATR. Quite a bit better than a half ATR. Alright. Let's head back to the 5. By the way, that's just a limit order reversion scalp, betting on a soft bear channel. Simple little trades. Back to the 5 here. All right, 340 till the close of bar 30. Major says, this is the worst chop I've ever traded. It's not the worst I've ever traded. It's not great, but candles hitting 30-point moves in 5 seconds, then fading back to hit stop loss. Yeah, so just trade small. If you're not trading small right now, I think you're a little out of line. It's okay to trade And small is relative, by the way. If small for you is, 50 minis, then hit fucking 50 minis. Must be worth a lot of money. But if small for you is 2 micros, then trade 2 micros. All right, bar 30. Gonna close up here in 2 minutes. And then we'll watch 31. Boring trader, took the close of bar 15 down. Yep, good trade. A little bit of wick on 15, not out of the wheelhouse though. And that wasn't necessarily a developed trading range yet, so 15, that was a reasonable thing that you did, shorting the close of 15. Risk the wick high of 15. If you wanted to go for more of a swing, you could even risk the high of day, the wick high of 13. Most people, I think, should trade smaller and take the tighter risk on a trade like that, so 15, because if it takes out 15, it's probably a trading range. Right, I mean, if you short the close of 15 and it takes out the wick high of 15, you're probably looking at this. So I think it makes more sense to use the wick high of 15 to manage risk on that. But yeah, it's a reasonable trade right there. All right, we got bar 30. Closing up here 40 seconds. Honestly, this is about a C+, maybe B- setup. I'd probably call this about a C+, C+ setup. So I'm going to wait on 31. The problem with waiting on 31 is we have this fucking range. But if you wanted to short 30, you could. For me, I'm just going to skip that for now. Quality just isn't really that great. Plus, you got this really soft bear channel here on a 2-minute chart. More obvious on a 2-minute, I should say. So we'll probably see a bounce, at least to the midpoint of that little channel. So if I'm going to short a soft bear channel like this, I'm looking for a small to moderate bull body to do it on. That's a little strong. I'm not too interested in stepping ahead of this trade. You could very easily take out the wick high of 71. If I were gonna, if you're like, Nico, you have to take a trade right now, I'd hit it short and I'd risk the wick high of 64. Well, actually, if you were gonna let me do whatever I'd want, I'd risk probably the wick high of 55. But for more of a reasonable scalp, I guess the wick high of 64, but I wouldn't because that's a freight train. Bar 76, I don't want to step in front of that. See us taking out the wick high of 30 on the 5-minute. It's tough to short that bar. Even in a channel. Just because you have too much wiggle room on the outskirts. Which is what you have to use to manage risk, right? So we'll let this develop a hair further. I'm going to give this a shot, risk the wick high of 64 now that we've developed into 77. And if this turns into a big sideways range instead of the soft bear channel, I'll know pretty quick. Oh, whoops. Jesus. There we go. Dump that thing, bears. Faded. There's a close of 77 into 78. Good. Keep that fading. Right back into the soft bear channel. There we go, half ATR scalp there. I'll pull it. A lot of scalp in here. Let me update the trade count. It's probably going to stay that way unless the 5-minute can clean up. I don't trust markets like this where it's range, range, range. So I tend to take the higher, I don't want to say higher probability. I tend to take the stuff that's a hair higher probability. And I tend to pull it at a scalp rather than looking for more intraday swing type stuff. So, if you're in a market condition like this, which of course we currently are, if I get just a beauty of a setup on the 5-minute, yeah, I'm going to put it on and take the bigger trade. But honestly, I'm cool just taking scalps, even if it's on the 5-minute. And it's not booking it early. That's not what it is, right? It's just that the plan is more scalp-based because the market is ranging harder. But volatility is still good, so I still want to be able to put stuff on. I just adjust a little bit. And what I mean by that is instead of, at least more often, taking the bigger swings on the 5 because this market, it's just not going very far. Which, I gotta tell you, is not my favorite market condition, but we can still get a little work done. It's fine. Just gotta do your best to adjust as it hits. Nico, why don't you use break even? Is that what you mean by BE? Break even stops? Well, I do. Bar by bar management. If it turns into that, tremendous. It's just a lot of people like to move their stops to break even. Look, I mean, whatever makes you feel better. I tried it too. A lot of people have gone before you, you know, me included. And it's not like we're all just idiots. We're also relatively intelligent. We all tried the same shit. I think there's a reason you don't see high-performing traders too often just arbitrarily moving their stop to break even when they feel like it, because they're a little bit in the money, because it erodes probability like fucking crazy. And you're asking the market to continue to move in your favor much quicker and much more reliably, whereas, you know, you guys have seen a million trades of mine over the last year live. A lot of them go deep in the money, pull back to break even, and then go again. And I end up getting my real target. Some of them pull back to break even, stop me out. I don't care. If you're trying to protect yourself psychologically, I think that's a different story. But the better way to protect yourself psychologically is not move your stop to break even. I think you're just going to fuck up your psychology, honestly. Because it's going to really piss you off when you keep getting stopped out at break even. The better way to do it is manage bar by bar as needed, leave it alone, and trade smaller. If you just swapped out break-even stops for trading smaller, I think you would do a lot better and have less emotions. Yeah, SR says this is real scalping. Yeah, look. I don't know if a lot of people have really internalized this. The market is ranging a high percentage of the time, right? It's not really in a trend very often. So if you wanted to throw a number out there, I don't know, maybe at least 80% of bars are kind of in a trading range or some form of channel, not a trend, probably more than 80%. So what does that mean? It means that you could theoretically buy or sell it at most points during the day and make money if you manage the trade properly, because it's ranging. We're getting a lot of price overlap. So you can scalp, and you might scalp to the short side on a 2-minute, and on a 5-minute chart, the bar closes green, but you made money. So there could be someone trading a longer time frame on a 15-minute who's sitting long, who's making money, and you could be taking short scalps, meaning scalping to the short side, but also quicker trades on like a 2 or 3 minute chart or a 1-minute chart or even a 5-minute chart, and also be making money. The difference is in the management. You don't have to be 80%-ish of the time. I could be sitting long, you could be sitting short, we both could win or we both could lose. It's just depending on how we manage it. Now in a trend, that kind of changes. That's when I start to say, okay, I'm looking for any reason to do this. Get long, get short. Now that yellow line, I barely even notice it. It's bottom of the barrel of importance for me. That's a 20 EMA, a 20 exponential moving average here on a 5-minute NQ. Okay, so remember we were talking about a big sideways trading range? 32 closing up, so I'm going to let 33 develop here on the 5. How many micros do you trade when trying to pass an eval? So, I'm not telling you what to do, but I can just tell you what I do. You know what I fucking hate, by the way? I hate when people do something one way and they try to teach you a different way. I get it. Even with RAM, there's a progression here, and it's all laid out as a progression in the tomb. You kind of have to start with something a bit more straightforward, get to break even, ideally profitability, which many of people are, and then you kind of expand to more scalps, you step out a little bit while maintaining the core. But I hate, like if somebody does something a particular way, but they're like, but you should do it this way. It's like, why don't you just tell me that you're more experienced or better, because that's the truth, and then tell me what you think I should do to get there the fastest if it isn't what you're already doing. Anyway, here's what I do. If you're trying to pass an eval, let's say it's a 50K Apex account, which is 90% off right now, by the way, big dog. I tend to trade, depending on volatility, I'll start somewhere between 1 and like 3, maybe more like 1 to 2 minis. And then as I get 2/3 or 3/4 of the way to the target, the buffer, I'll back off. I size down into the finish line to like 3 to 5 micros, maybe even 2 if I'm really close. And the only reason I do that is because as I have more time invested in an eval, my number one priority is opportunity cost, is the time investment into passing the evals. Because time is more valuable than the eval costs, than what the eval costs, especially when you're a profitable trader. So I'll size down into the finish line, which increases the probability. Doesn't make it 100%, but it increases the probability that you'll pass that eval the more time you've invested into it. Which to me makes a lot of sense. If volatility's high, I'm like a 50K eval, I think 1 mini is fine. 2 minis if it's a bit lower. Again, you probably should trade, if you're not profitable, you should trade like 1 micro and just keep your expenses low in the eval until you're profitable. I'm only telling you what I do. I'm not telling you what to do. Opportunity cost is really important. Now, once I get into the fundeds, it's 2 to 5 micros per funded, assuming it's a 50K. Alright, so the 5 minute here, there's not too much going on. The 2 minute, oh man, the 2 minute's a train wreck. And you know when something's a train wreck? We've talked about this. It's like, yeah, but maybe, right? What do? When you could draw whatever you feel like, and it might kind of work, and you're like, I'm so fucking confused. You do this. And 90% of the time, you're like, oh, it's a big trading range. Okay. Half the battle here is cutting down on confusion as much as you can. Yeah, I'll someone's asking about the numbers under the candle. Does anybody know? Is there a way? I'll just have to figure it out because I can't trust a thing that one of you guys, unless you're a regular, tell me. I'll get that on my website here eventually, and you'll be able to download it. All right, we got bar 34 trying to close up top here. However, we just drew a big sideways trading range, didn't we? Yes, we did. Which means that we're right up in the upper quarter of that range, which means getting long, even though you have 31, 32, 33, 34, for me is not too logical, is it? And you pop over to the 2-minute, and the soft bear channel that we had on the 2-minute that we scalped a few times is broken. We're right back to a sideways range. Even the 2-minute chart, bar 84, is closing right up top here, which would be a bet on a breakout, which I'm not into. 80% of breakout attempts in trading ranges will fail. And sometimes you'll look back on 2 or 3 trades in a row you took and you'll be like, son of a bitch. I was betting on breakouts. I didn't even see that. It's okay. Just get your head on straight as soon as possible. It'll happen to you. Stop hunt for the wick high of 13. Nope, not the way it currently sits. Range, 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 and it's not the kind of range that I'd like to stop hunt where it's an aggressive curl. You gotta be careful. The market context right now in general, you have intraday context, then you zoom out, and you have a context of kind of the last like week, 2 weeks. Right now, that zoomed out version is range, range, range. Trust no breakout until it's so obvious. You don't want to miss it if it turns into a trend. But I'd rather miss the first trade with a range turning into a trend than bet on every first trade and lose every single one of them. And then eventually maybe you're right. I'd rather just kind of miss that first one and then it's like, okay, I'm clearly wrong that this is still a trading range. Now let me trade the trend. Now you see, this is a pretty prime example. You see how 18 took out the wick low of 1? By a point? Less than a point, maybe 3 ticks. See how this came in real slow to that high a day? Wasn't all that mature. Still the high a day though. And I think people who are not really looking at the nuance yet of RAM would say, stop hunt. Yeah, well, it's going to break it and probably go a few points. This actually went more than you might expect. Once 8 points, 7 points, immediate fade. Range, range, range. Trust no breakout until it's so obvious. Now, obviously, ranges can be a little bit subjective. I'm talking the big range. You see this? They're just tempting up here. Man, I don't know. Well, I mean, I know it's a big range, but my question is, do we turn this into a big wedge? And the answer is probably just the big range. Don't overcomplicate it. If it's a big trading range, just look at it as that. I prefer not to overcomplicate things. You usually end up losing when you start doing that. Beautiful close out of 35. Trading range, can't take it. Let's watch 36, see how that closes up. Maybe we'll get a test of the wick high of 13, which is also the high of day. All right, what are we thinking? Is this going to fade back all the way into the range, or are we going to fade back a bit, push through, bounce, push through the wick high of 13 and turn this into a soft bull channel? What do you think? Yeah, I think range is what I think. All right, I'm gonna grab coffee. Be right back. All right, what's up? Watching this 5-minute bar, that's bar 37. Minute 15 out here from the close. And Bull's trying to step in. If the Bears would close this up nice and clean, that's a nice small bar. I'd short it, plenty of room. Plenty of room, but we gotta see if the Bears can get that done. Whole lot of nothing over on the 2-minute right now. Back to a 5. See if the Bears can fade this baby back down in the next 45 seconds. Give me a nice clean close. Here comes the close, inside close out of 37, all right. All right, watching 38. See what it brings here. One sec. All right. All right, 38's not looking too bad. We're gonna be pulling back into the 20 EMA. With all this mess, I really don't care, to be honest with you, because what I see is a big giant trading range, which means this is gonna end up in the middle regardless with a whole bunch of tests. I just don't think it really matters. But I still gotta get that price action closed, which means a clean close here out of the Bears, and they're losing! Come on, Bears, bunch of babies today. I shouldn't complain too much. They paid us twice. Still pissing me off. How's our poll looking? No, you'll know when I'm in a trade. It's pretty obvious. Upper right of your screen. Three so far here. Alright, there we go. Taking out the high of day, Bulls. This would be the first bar to close outside this big trading range all day. So let's see if they can close it up, minute 24. Bulls pushing, pushing, pushing. All right, let's see if they can close it up. We got 42 seconds. Well, this is the biggest, this is the surprise bar of the day here so far. I mean, you could say 4, but contextually speaking, we're looking at basically the exact same range on these two bars, and this one comes at a point during the day when contextually that's much less expected. So that right there is the surprise bar. If you wanted to get long above 38 here on the close, man, you definitely could. You would definitely want to trade really, really small though, and I know that that's news, so I'm gonna chill out and wait for 39. But you see how that could have worked. Obviously with news, it's not quite as, the probabilities aren't really as set in stone as I'd like. So let's wait, let the news settle, let the price action chill a tad, and then we'll hit it. Well, that's going to be good for volatility. Holy shit, look at that move. You know, by the way, some of you guys, I know you're looking at this right now and you have FOMO. Crazy feelings of FOMO. I don't know, dude. FOMO's never really been so much of a thing for me. And I think it's because I internalized really early that A, you miss out on moves like this thousands of times a day. By 9:31 a.m. Eastern time, had you just bought X option contract the night before or the day before, it'd be life-changing amounts of money. Oh, if only I'd put my life savings in X option contract. This morning, I'd be waking up worth 100 times more. That's not real. That's great. That's not real. Moves like this, I look at them and I'm like, good, that's good for volatility. But are you going to make a living the next 40 years trading these random 50-50 unexpected news bars? That would be a ridiculous expectation. Which, to me, kills FOMO instantly. I just don't care. It's like, good, we'll get some more volatility. We heading back to 24,000, man? This is something else. This is crazy. This right here is why if you're trading in a particular direction, Please, unless you're like a 10, 15 year vet and you have a reason to scalp with no stop or something because you're managing it manually, just have a stop. Even if you're trading with wide stops, put it out. This will happen eventually and you'll be happy you had it. Even if you're managing your trades manually most of the time. Just put the order out. Yeah, that Iran news, by the way. So, all the news wires are like taking an hour to load right now because everyone's checking. Iran's president, we're ready to end war but want guarantees. See, that hit, I think, a little before this hit. I was already seeing that. Unless you have a setup that you're very sure of the edge on it in this environment here, chill out. Just chill out a little bit. We're still reacting to news. And news is 50-50. Chat says, Nico, don't forget hedge funds want to impress their clients with end of quarter rallies. Hence this window dressing happening at end of most months and quarters. Yeah, I mean, look, can it be that simple? Sure, 100%. But the institutions play games that we don't even understand. Do you guys remember that old Kramer interview? Where he talked about the games they would play. It's all about creating a feel to have people come in after you to get what you want. So, for example, it's not so easy today as it was when he was talking about it in that interview, because there's a lot more money at play. The markets were a bit smaller back then. It was easier to create a feel. But he said that his fund, they would take a particular instrument up pre-market, and then they'd roll it into the open. And that creates a really negative feel. When you're up pre-market and you roll through the open and tank hard, that is when they would get short and let everyone else come in and freak out the rest of the day and take them lower, put them in the money. Now, again, this is alleged, but he said it himself, so I'm paraphrasing. Did they actually do it? I don't know, dude. I'm just saying what I'm paraphrasing what was in the interview. My point in bringing that up is not that that's exactly what they do, but these games are, I think, a little more complex and original to what that particular fund needs to happen for us to try to make bets based on speculation of what they might do. Price is truth. Aggressive call buying on the Qs from oh wow, from 2 hours ago, huh? I'm sure it was a coincidence, wasn't it? These motherfuckers, they just do whatever they want. No one even looks into it. I wonder who that was. Oh, man. Maybe some young guy at the news desk got a little heads up that they were going to have a story this afternoon and got cute with it and went and loaded up on Qs. You know what? Hope he made a bunch of money. Good for him. It's crazy. Chat says, I heard someone say that markets will move in a way where whoever the biggest player is during that session, it will play mind games with that player to lose him as much money as possible. I disagree. The great thing about the market is that the market is bigger than any single participant. Especially futures. Futures are a very deep market. Now, that's not to say they may not play games with sides. They might play games with bulls, bears, but it's more about, like I just said, it's more about, I think, creating a feel. Which is not going to have a 100% success rate. But if you can create a really negative feel and then get short right ahead of creating that, other people still have to push you in the money. So obviously, you know, no retail individual is going to have enough capital, even ultra wealthy. It takes way more than you think. But the thing is, it didn't in the 80s. It didn't take that much. you can move things around pre-market with not that many millions. Again, all speculation. We have no idea, but that, to me, if I had to guess, you know, you'd think that's probably what some of the scumbag institutions are doing. All right, you see this? We're in a period right now where this is basically 50-50. There's a small bullish bias. We're talking maybe 55-45. But we could very also likely just range up here for a while in a sideways trade range. All right, you see 40, 41, 42? That's some indecision here. It's going to look like a little bit of a trading range here on the 2-minute. Probably even more so on a 1-minute chart. Yeah. So let's head back to a 5 and see which direction this decides to go, if any. Okay, so again, if you're just joining us here, this news, I don't even know if it was an immediate reaction. It felt a little delayed to me. But Iran's president says, we're ready to end war, but we want guarantees. That shot the dollar lower, though it attempted to recover. Shot the S&P and then the Nasdaq here quite a bit higher, much higher actually. And that's about it. Now, sure, when you get a move like this, is it entirely possible that you get a second leg? Yeah, of course. But if I thought the probability on that and the math on it in general made sense, I'd be sitting long. I need a setup before I do that. Because right now, 40, bar 40, 41, 42, this is a new trading range. It's been 14 minutes. All right, so I have a question in the chat. Is anybody sitting in a position right now? And do you have the guts to tell everybody? Which way do you sit? We have one honest trader in the chat who says they have 2 micro E-minis long. We have 2 longs and a short. Oh man. This is really close to 50-50 right now. Gotta tell you. Alright, let's see if the Bulls want that second leg. Ooh, Neon says they went long 560 calls yesterday. Got lucky with the gap and go. Oh, man. 15-minute chart, sure. Let's take a look. The 15-minute chart is telling me that we got a pop in a range, though we could get a second leg higher. But I got to tell you, I need a setup. I need a setup because we were ranging so hard. Look at what happened previously. Hard range. Big surprise bull body out of bar 13 here on a 15-minute. And then this is not a short-lived bar. That's a 15-minute candle, closing as basically a doji with 2 wicks. So I want to see if bar 15 here on the 15 can break the wick high of 13, actually get a close above it, and then I'm still a little concerned about this just being a big trading range up here. But that second leg, again, maybe 55-45 as far as probability, which is not very good. Typically for me, I'm looking for... I try to keep my minimum. Again, this is just to keep the numbers easy. Obviously, the probability isn't actually this percentage, but for the sake of explanation, it kind of has to be. We kind of have to assume a 1-to-1 reward to risk. My minimum is 60-40 that I try to keep it at. Again, you're not going to know for sure, but based on screen time and experience, if you're looking at something and it's like, yeah, if I put on a 1-to-1 trade, we're talking 52-48, I pass. All right, back to a 5-minute here. Let's see what 43 brings. Got the wick high at 39, high a day. Sitting about 860. 55 seconds out here from the close of bar 43. 15 seconds. See if they can close above the wick high at 39. Nope, doesn't look like it. Whoa. Hit a button, my bad. All right, inside close on 43. Still in the range. Range. We'll sit here on a 5-minute chart and see what's up. Right back into the trading range. You're out of the bears. So if I show a 2-minute chart, actually let's show a 1-minute chart. Yeah, I might give you the wrong idea. Look at a 2-minute. See what I mean? There's just a whole lot of risk of this. Whole bunch. Minute 20 out here from the close of 109. That's what I'm talking about on the 5. These wicks, obviously, are included there on the 2. They show up as more easily distinguishable bars, so it's easier to see it on the 2-minute. But it doesn't mean it's not there on the 5. Of course it is. TakeProfitTrader is trying to backfill that range. Again, look at the 2-minute. There you go. Pretty fucking clear, huh? So right now, in order of probability in the short-term future, the highest probability outcome is we continue in this new trading range. The next is a second leg higher. And the lowest probability outcome, though still high enough to greatly consider, is the pullback. Now, the difference in all these probability-wise is not as big as you might assume, but it's there. All right, you range. All right, back in 2. Don't you go anywhere. right, bulls. What you got here? Are we gonna break this little trading range? Or are we gonna fade right back in? Should we look at the 2-minute? This is the 2-minute here. You got the high of day kind of split between 97 and 108. It's the bar count here on the 2-minute chart, NQ. And let's see if we can take out the high of day. And we've got a bit of a bull wedge. Slash range. So for me to get long, it takes some convincing here. Alright, let's set on a 5-minute. Alright, there they are, taking out the high of day. Now the question is, can they maintain it? Because this is a range. We've got 13 seconds here until 46 closes. It would be the first bar to close outside of this new range since the Wikai of 39. Obviously, we've been in here for a half hour. It will be the first bar, so I gotta wait on 47, which just opened 5 minutes. Okay, let's see if bar 47 can pop through the Wikai of 46 and actually give me a nice clean bull close. 46, of course, was the first 5-minute bar to close outside of the new trading range after the news pop on 38 and 39. Again, this is a 5-minute NQ chart. The numbers are just the numbers of the bars from the New York Open. Right now, the biggest concern is trading range after the pop. So I got to see if 47 here can give me a clean bull close above the wick high of 46. Bulls are struggling here with the top end of this trading range. For me to participate to the long side for a second leg, I gotta see at least 48 now close as a nice clean bull body. It's gotta be well above the wick high of 46. Otherwise, range. here's a 2-minute. Now, the question right now becomes this. Do we see this, or there's starting to become a legitimate argument on the 2-minute for somewhat of a bull channel, bull wedge? I'm gonna hit that for a stab on the bull channel. You're on the 2-minute chart. Alright, bulls! Let's fade that thing and maintain this little channel here. If they want a little wiggle room, I'm cool with it. There's also that little argument of a trading range, of course. So a little wiggle room is not entirely unexpected. You want to fade my entry, man? Be my guest. I don't take offense to it. Alright, there's 40 here. Keep that pushing, bulls. Alright, there's a close of 121 into the open of 122. Looking for a full ATR here on this trade. There you go. Better than a full ATR out there. Alright. Keep it pushing, baby. Right, 122 here, trying to backfill the top end of this channel. It's looking to me more and more like a soft bull channel, at least here on the 2. Yes, sir, Num. Apex 90% off. Code BIG, baby. B-I-G. Gotta love 90, man. We love it. Why'd I take the trade? Yeah, basic ram scalp. Bet here on this trading range. Altering into a soft bull channel. See that? But this is on the 2-minute. Bought the close of 119, or at least in that general vicinity. See how that plays out. Basic price action, basic ram stuff. As long as you can make mathematical sense, risk the wick low of 110. For me, that trade's a no-brainer. Win or lose, accept the outcome, move on with your life. Thanks, Nico. Passed my eval on that long. Good work. Love to see it. So you see how the market environment talked about this for probably the entire last year I've been streaming. When the market environment is range, which we know intraday. Look, I get it. We got the pop. On a 5-minute chart especially, that's a trading range. Maybe a soft bull channel on a smaller time frame, but this is essentially a big trading range. I lean heavier into scalps. When the market is volatile, but the price action is less range bound, both intraday and from a zoomed out market context perspective, you'll naturally see me taking more intraday swing style stuff on like a 5-minute chart. You can scalp on a 5-minute. You can scalp on a 2-minute. You can take intraday stuff on a 5-minute. You might even sometimes on a 2-minute. It's just... don't... I think people oversimplify, but they also overcomplicate by focusing on the wrong things. You overcomplicate the methodology, you oversimplify the nuance. And see that here? Right back into the trading range, bar 50. What range, you might ask? It's pretty clear, man. Right there. We said it might do this on bar 41, remember? What's the next play? Whatever it ends up being. We take logical ram trades around here as they come. So don't ask me what the next play is, because if there was a next play, I'd be in it already. 4 trades so far. We've had 3 winners, 1 loser. And when the next one comes, I'll hit it. What's your trading strategy? I trade RAM. It's the wrench action method. It's my take on price action. Mr. Zakani says, funny, last trade you took, you were long, I was short, you made profit, they made profit too. Look, 80% of bars, candles, throughout the day, you could technically buy or sell and make money because there's so much overlap. Why? Because the market's in a range environment like 80% of the time. So it's all in how you manage it. So if somebody's swing trading and someone else is scalping, you can be the same direction. You could both be long and one can make money, one can lose money. You could also have someone short and someone else long. You could both win, you could both lose. It depends on how you manage it. Do you have videos on the RAM method? Oh God, I have tons of videos. There's like over 50 hours of original content in the tomb right now. And I add more every single day. I'm gonna go live here in an hour and 18 minutes for 2 members. We're gonna do a RAM lab, which is open Q&A. Whatever anyone needs, we get it figured out. All right, 2 minutes here. We got bar 51. Shalon, Shalon, however I'm saying it. Welcome, brother. Good to have you. All right, bar 51. What do you guys think? We just gonna fail the downside break, head right back into this trade range, or what's up? When you're confused, I know I say it all the time. That's because I say it all the time to myself. When you're confused, range, 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 range. Drive it into your skull until you see something where you're no longer confused. Maybe you look at a 2 minute, it's like, oh, I know what to do, that's a scalp. Then you put it on. How's our poll going? Oh man, come on you guys! Come on you guys. 49%. Open up your mind, homeboy. You're worth more than that, big dog. Come on. You know, for those of you, I don't know if they're here today, but I mean, come on now. For those of you guys who are like, yeah, but like 10K, I promise you, you're going to get to 10,000 a month and you're going to be like, holy shit, life is still really expensive. I have to put brakes on my car. There's 20% of my monthly fucking income. Life is too expensive to shoot for 10,000 a month and there's too much opportunity here. I promise you, this is a preconceived notion that has been instilled in you since you were a child. $100,000 a year. Man, that's the goal. There's so much opportunity. It's not going to be what you think if you haven't been there. You're going to look at that and say, oh shit, I'm still broke. Come on, dude. There's a big difference between needless, blind greed and self-respect. Get the capital in your control so you can do good things with it. That's not greed. Greed is staring at your pile of money saying, ooh, I want to make it bigger so other people can't fucking have it. That's greed. Making a lot of money to provide for yourself and your family and to do good things and to make change is the opposite. It's capital and wealth being put in your control so because you fucking earned it and you're gonna do good things with it. That's not greed. Oh, I forgot my entire point. I don't know if they're here today. Typical. I don't know if they're here today, but we had somebody come in the other day, and they're like, hey, Nico, I've been trading for 3 months. I just had my first $10,000 month from trading alone. 3 months. Are you kidding me? You think they're saying I'm going to stay at 10,000 until I'm 78? Come on now. And they did it when the market wasn't even so pretty. Imagine what they can do when it's a trend. 3 months into the game. Darren says, I've been at it for 6 years, haven't been green at end of year once. What do you want, big dog? You want a pity party? Tough love, brother. I've seen people go at this for 10 years and not be green at end of year even once. Switch it today. Say, all right, I'm sick of this shit. I'm gonna brute force discipline. I'm better than this. I'm gonna brute force it for 2 weeks. I'm not gonna break rules. I'm gonna follow a simple methodology that makes sense in my head, and I'm gonna turn that around. Don't let 6 turn into 16, you know? All love, big dog. Well, bar 53, 4 minutes, 10 seconds out. Still in this trading range. 4 trades so far, 3 winners, 1 loser. Look, does money buy happiness? This is such an easy question to answer in my head. The answer is, if your unhappiness is primarily, and you have to be honest with yourself, is it primarily driven by the financial stress that you're under? If the answer is yes, then money does buy you happiness because it creates a life where you are free of financial stress, which was the primary driver of unhappiness. But if you're somebody dealing with actual depression and it's not brought on by your daily habits, which I would argue that a lot of times it is, though of course not every time, especially as a man, dude, if you're not feeling it right now, I know I'm oversimplifying things, I get it, but just please, try. Get up every day, try to make as much fucking money as you can, go to the gym, train your ass off, do it for 2 weeks, and then come back and tell me if you're still feeling like shit. For probably half of you, the answer is, nah, I feel good, dude. The goal is progress. The goal always is and always has been progress. But money won't buy you happiness if the cause of your unhappiness is not financial stress. Seems like a pretty fucking clear answer to me. Still in this trading range. Oh, you bears, bulls, anybody. Reminder here, Apex is 90% off on all accounts when you use code BIG. B-I-G, baby. Go hit it. We love it. The numbers will not look better than they do right now as far as making that ROI positive. This is the 5-minute NQ chart that you're looking at currently if you're just joining us. Any account size, code BIG, any account size. Does not matter. You're welcome, Tarzan. Go hit it, brother. Do it up. Do it up big. Alright, we got bar 54 here. Alright guys, well I'm having a decent day here so far. Those of you guys in the tomb, I will see you in about 1 hour in the portal. We'll go live, we'll do our RAM lab, anything you guys need. But right now, since I got that on the agenda, we're in a trading range here. I'm gonna go hit lunch. Alright guys, pretty good little Tuesday here. Let's see what we can do midweek tomorrow. And alright. I'll be, well, yeah, I don't know. It depends if we break out of this trading range, but just be patient. This is a trading range, especially if you look at a 2-minute here. Let's quick pull that up. See this? Come on, man. Big range, big range, big range. So let's see if we end up breaking lower, higher, whatever. Be patient, let the continuation trade come to you, and if it's not there, just keep drilling it into your skull, man. Range, range, range. All right, guys, I gotta get out of here. I'm gonna hit lunch. I will see you guys tomorrow morning. Have a good day.